Question 1. Risk selection in underwriting. Which of the following factors would most likely result in a higher risk classification for an individual applying for homeowners insurance? A. The applicant has a history of property claims. B. The applicant owns a new home with modern security features. C. The applicant has a long-term stable job in a low-risk profession. D. The applicant lives in an area with low crime rates and low weather-related risk. Answer A. The applicant has a history of property claims. Explanation. Risk selection involves evaluating the applicant's history and other factors that could affect the likelihood of claim. History of property claims typically signals that the individual may present higher risk for future claims, making this applicant more likely to fall into a high-risk category. Underwriters often assess prior claims experience to identify potential issues that could lead to future claims. Other factors, such as home security features, stable job in low-risk profession, and living in low-risk environment, would typically reduce risk and favorably influence underwriting decisions. These factors do not indicate elevated risk, unlike history of property claims, which signals higher potential for loss. Question 2. Scenario-based question on health insurance underwriting. Mr. Williams is applying for health insurance. He has a history of mild asthma and currently uses an inhaler only when necessary. During the underwriting process, he provides full disclosure about his condition. What should the underwriter consider when evaluating his application? A. Mr. Williams' asthma will automatically disqualify him for coverage. B. Mr. Williams' asthma is a pre-existing condition and should be considered, but it does not necessarily result in a higher premium. C. Mr. Williams' asthma must be disregarded as it is a common condition and should not affect the underwriting decision. D. Mr. Williams' asthma will result in a policy rejection due to the underwriting guidelines for chronic conditions. Answer B. Mr. Williams' asthma is a pre-existing condition and should be considered, but it does not necessarily result in a higher premium. Explanation. Health insurance underwriters evaluate applicants for both general health and specific conditions that may pose a risk. In the case of mild asthma, which is typically not severe, the underwriter will need to assess the severity and frequency of the condition. According to underwriting guidelines, pre-existing conditions must be considered, but their impact on the premium or eligibility depends on the severity of the condition and the applicant's current health status. Underwriters may apply a waiting period or limit coverage for pre-existing conditions, but unless the condition is severe or significantly impacts the applicant's health, it generally would not result in an automatic policy rejection or much higher premium. Option C is incorrect because asthma, even mild, must still be evaluated. Option D is incorrect because asthma is not always considered chronic or severe enough condition to result in policy rejection. Question 3. Underwriting ethics. Which of the following actions by an underwriter would most likely be considered an unethical practice in insurance underwriting? A. Using a statistical model to assess risk based on applicants' age and driving records. B. Denying coverage to an applicant based solely on their race or gender. C. Adjusting premiums based on an applicant's credit score and employment history. D. Asking applicants for detailed information regarding their medical history to assess health insurance eligibility. Answer B. Denying coverage to an applicant based solely on their race or gender. Explanation. Unethical practices in underwriting typically involve discrimination or unfair treatment of applicants based on personal characteristics unrelated to risk. In this case, denying coverage solely based on race or gender violates anti-discrimination laws and insurance regulations. Underwriters must ensure they are not making decisions based on prohibited factors, as discrimination is prohibited under federal and state laws, including the Maine Unfair Trade Practices Act. Option is standard practice, as statistical models are commonly used to assess risks based on measurable factors such as age and driving record. Option C, while it may raise concerns regarding fairness, is typically permitted within the confines of certain underwriting guidelines and legal frameworks. Option D is hollow, a standard practice in health insurance underwriting, provided the information is collected legally and ethically. Question 4. Understanding policy exclusions. Which of the following is most likely to be excluded from a homeowner's insurance policy under standard underwriting guidelines? A. Damage from a burst pipe due to freezing weather. B. Damage caused by a hurricane that resulted in flooding. C. Theft of personal property after a break-in. D. Fire damage caused by an accidental kitchen fire. Answer B. Damage caused by a hurricane that resulted in flooding. Explanation. Homeowners insurance typically excludes certain types of damages, with flooding being common exclusion unless specifically covered by a separate flood insurance policy. Underwriters assess these exclusions to ensure that applicants understand the limits of their coverage. Damage caused by natural disasters like hurricanes may be covered under different policies, such as flood insurance, but not under standard homeowners insurance policies. Options A, C, and D are generally covered by most standard homeowners policies. Damage from burst pipe, A, theft, C, an accidental fire, D, are typically covered unless otherwise stated in the policy exclusions. Question 5. Commercial underwriting. Which of the following is the most important consideration for an underwriter when evaluating a commercial insurance application for a manufacturing facility? A. The applicant's personal credit score. B. The facility's safety protocols and risk management measures. C. The applicant's prior personal insurance history. D. The applicant's age and years in business. Answer. B. The facility's safety protocols and risk management measures. Explanation. In commercial underwriting, one of the most critical factors is assessing the business's risk management and safety protocols, especially for manufacturing facilities, which are prone to specific hazards. Underwriters will examine the company's safety procedures, including equipment maintenance, worker training, and compliance with industry regulations to mitigate the risk of accidents or claims. Option: personal credit score is less relevant for commercial policy compared to business financial health. Option C, prior personal insurance history is not as relevant for underwriting commercial policies as it focuses on the business's operational risk factors. Option D, age and years in business is also important but does not weigh as heavily as the business's proactive risk management and safety measures. Question 6. Underwriting guidelines and decision-making. Which of the following is an underwriter most likely to do if an applicant's risk exceeds acceptable thresholds but the applicant is willing to pay high premiums? A. Reject the application outright without offering any other alternatives. B. Accept the application with standard policy terms and conditions. C. Modify the application by increasing the premium and adjusting coverage limits. D. Recommend the applicant seek policy from another insurance company. Answer. C. Modify the application by increasing the premium and adjusting coverage limits. Explanation. Underwriters have the discretion to adjust policies based on the risk assessment and the applicant's willingness to accept higher premiums. If an applicant's risk is above the underwriter's acceptable threshold but they are willing to accept higher premium, the underwriter may modify the terms of the policy, such as increasing the premium and adjusting coverage limits, aligned with the risk. This is common practice in both personal and commercial underwriting. Option: rejecting the application outright would only be done if the risk is considered too high to insure and higher premiums cannot mitigate the risk. Option B: accepting with standard terms is typically not done if the risk exceeds acceptable thresholds. Option D is not standard practice if the underwriter would try to accommodate the applicant within their guidelines. Question 7. Property and casualty underwriting. Which of the following factors is the most likely cause for an underwriter to increase the premium for an auto insurance policy? A. The applicant's age is 25 and they have a clean driving record. B. The applicant lives in a low-crime neighborhood. C. The applicant has been involved in multiple accidents in the past 5 years. D. The applicant's car is over 10 years old but still in good condition. Answer. C. The applicant has been involved in multiple accidents in the past 5 years. Explanation. One of the key factors in underwriting auto insurance is the applicant's claims history, including past accidents. Multiple accidents within short periods suggest higher risk of future claims, prompting the underwriter to adjust the premium accordingly. Applicants with history of accidents are typically classified as higher risk, and this results in higher premiums to cover the increased likelihood of future claims. Option would not likely result in an increase because clean driving record is favorable underwriting factor. Option B, living in low crime neighborhood generally lowers the risk and can lead to low premiums. Option D would have less of an impact on premiums compared to claims history, although the car's age and condition may still be considered. Question 8. Fraud prevention and detection. Which of the following actions by an underwriter would most likely raise a red flag for potential fraud during the underwriting process? A. An applicant submits an incomplete medical history and refuses to provide additional information. B. An applicant discloses a minor medical condition that occurred many years ago. C. An applicant requests a higher coverage limit than is standard for their type of property. D. An applicant consistently provides documentation that aligns with the underwriting guidelines. Answer A. An applicant submits an incomplete medical history and refuses to provide additional information. Explanation. One of the primary red flags for fraud is an applicant who is unwilling to provide complete information or refuses to provide necessary documentation. Incomplete or inconsistent information can suggest that the applicant is concealing important details, such as a pre-existing condition which could affect the underwriting decision, raises concerns that the applicant may be attempting to obtain coverage under false pretenses. Option B is less of a concern, as minor medical conditions that occurred in the past may not be significant in the underwriting process. Option C could be a sign of risk, but it is not inherently fraudulent. Option D represents standard behavior and would not raise any suspicions. Question 9. Insurance policy structure. Which of the following is typically considered part of the insuring agreement in an insurance policy? A. The exclusions that limit coverage. B. The policyholder's premium payment schedule. C. The insurance company's commitment to cover specific types of losses. D. The conditions for renewing the policy. Answer C. The insurance company's commitment to cover specific types of losses. Explanation. The insuring agreement outlines the core commitment of the insurer to provide coverage for specific types of losses or events, such as damage to property, medical expenses, or liability claims. This is the primary part of the insurance contract, specifying what is covered under the policy. Optional exclusions details what is not covered, but it is not part of the insuring agreement. Option B. Premium payment schedule is part of the policy's conditions, but not the insuring agreement. Option D. Conditions for renewing is also condition, but it does not pertain to the actual coverage of the policy. Question 10. Underwriting and ethics. Which of the following actions would be considered an unethical practice in underwriting? A. Using actuarial data to calculate premiums based on risk factors. B. Denying a policy due to an applicant's gender which is unrelated to risk. C. Evaluating the applicant's health condition in relation to premium rates. D. Using standard underwriting algorithm to assess risk in property insurance. Answer. B. Denying a policy due to an applicant's gender which is unrelated to risk. Explanation. Denying an insurance policy based on gender factor unrelated to risk would be considered an unethical practice in violation of anti-discrimination laws. Underwriters are prohibited from using protected characteristics such as gender, race, and age outside of specific actuarial factors in making underwriting decisions. This would violate fair practice regulations, such as those outlined in the Maine Unfair Trade Practices Act. Option A, C, and D are standard and acceptable underwriting practices as long as they are based on relevant risk factors and are done within legal and ethical guidelines. Question 11. Risk evaluation. Which of the following is an underwriter's primary goal when evaluating an insurance application? A. To ensure the applicant has the lowest possible premium. B. To determine the applicant's risk level and set appropriate premiums. C. To assess the applicant's personal credit score. D. To guarantee the applicant is offered the highest coverage available. Answer B. To determine the applicant's risk level and set appropriate premiums. Explanation. Underwriters assess the risk level of the applicant to determine the likelihood of future claims. Based on this risk evaluation, they set appropriate premiums and decide on coverage limits. The goal is not necessarily to offer the lowest premium, but to price the policy fairly based on risk. Question 12. Policyholder information. Which of the following would most likely result in an underwriter requesting additional information from a homeowner's insurance applicant? A. The applicant's home is located in a hurricane-prone area. B. The applicant has large dog as pet. C. The applicant is first-time homeowner. D. The applicant requests high coverage limit for personal property. Answer A. The applicant's home is located in hurricane-prone area. Explanation. If home is located in high-risk area, such as one prone to hurricanes, underwriters will often request additional information to assess the potential risk. This helps them understand the specific hazards and determine the necessary coverage and premium. Question 13. Insurable interest. Which of the following best defines insurable interest in the context of an insurance policy? A. The value of the property insured. B. The financial interest person has in the insured property or person. C. The amount of coverage policyholder requests. D. The length of time policyholder has held the insurance policy. Answer: B. The financial interest. A person has in the insured property or person. Explanation: insurable interest refers to the financial stake a person has in the insured property or person. For an insurance policy to be valid, the policyholder must have an insurable interest, meaning they would suffer a financial loss if the insured event occurred. Question 14. Premium adjustments. If an underwriter identifies a high-risk factor in an applicant's profile, what action is most likely to occur? A. The policy's premiums may be adjusted to reflect the increased risk. B. The policyholder will receive discount for their willingness to accept higher risk. C. The policyholder's claims history will be ignored in the underwriting process. D. The policyholder will be offered coverage only for certain types of claims. Answer: A. The policy's premiums may be adjusted to reflect the increased risk. Explanation: when high-risk factors are identified, the underwriter typically adjusts the premium to reflect the higher risk. This ensures that the insurer can cover potential future claims while also maintaining profitability. Question 15. Policy exclusions. Which of the following is a typical exclusion in a standard homeowner's insurance policy? A. Accidental damage caused by neighbor. B. Theft of personal property. C. Damage caused by earthquakes. D. Fire damage from lightning strike. Answer: C. Damage caused by earthquakes. Explanation: earthquake damage is often excluded from standard homeowners insurance policies unless the homeowner purchases separate earthquake coverage. Other types of damage, such as theft, accidental damage, and fire damage, are typically covered. Question 16. Underwriting guidelines. Which of the following best describes an underwriter's role in the insurance process? A. To decide the final payout for claim. B. To assess the risk associated with an insurance applicant. C. To determine the applicant's eligibility for claim. D. To advise customers on the best type of coverage for their needs. Answer: B. To assess the risk associated with an insurance applicant. Explanation: the primary role of an underwriter is to assess the risk posed by an insurance applicant. They evaluate factors such as the applicant's history, the property's location, and other relevant information to determine whether the applicant qualifies for insurance and at what premium rate. Question 17. Coverage limits. What is the primary purpose of setting a coverage limit in an insurance policy? A. To limit the maximum payout available for a claim. B. To ensure the policyholder never exceeds their premium payments. C. To increase the premium costs for high-risk applicants. D. To prevent underwriters from offering excessive coverage. Answer: A. To limit the maximum payout available for a claim. Explanation: coverage limits specify the maximum amount an insurance policy will pay out for a covered claim. They ensure that the insurer is not liable for an excessive payout and help to define the scope of coverage. Question 18. Actuarial data. What is the role of actuarial data in the underwriting process? A. To calculate the total value of the insured property. B. To assess the probability of a claim occurring based on statistical data. C. To evaluate the applicant's personal health information. D. To determine the policyholder's eligibility for refund. Answer: B. To assess the probability of a claim occurring based on statistical data. Explanation: actuarial data is used to analyze patterns and probabilities of future claims based on historical data. This helps underwriters make informed decisions about the level of risk associated with an applicant and determine appropriate premiums. Question 19. Subrogation in insurance. Which of the following best defines subrogation in the context of an insurance claim? A. A process of reducing an insured's deductible. B. The insurer's right to recover payments from third party who is at fault. C. The policyholder's obligation to inform the insurer of potential risks. D. The insurer's right to cancel policy after claim has been made. Answer: B. The insurer's right to recover payments from third party who is at fault. Explanation: subrogation is a legal process in which the insurer has the right to recover the costs of claim from third party that is responsible for causing the loss. This ensures that the insurer is not unfairly bearing the costs of an incident caused by someone else. Question 20. Moral hazard. Which of the following best describes a moral hazard in underwriting? A. The risk that an insured individual will misrepresent their health status. B. The risk that an insured will file fraudulent claims to receive payment. C. The risk that an insured's property will be damaged due to natural disasters. D. The risk that an insured person will take more risks because they have insurance coverage. Answer D. The risk that an insured person will take more risks because they have insurance coverage. Explanation: moral hazard occurs when an insured person behaves recklessly or takes on more risk because they know they are covered by insurance. This can lead to higher claims and higher overall costs for insurers. Question 21. Premium payment frequency. Which of the following is likely to result in a higher insurance premium? A. Paying premiums annually rather than monthly. B. Choosing a higher deductible. C. Paying premiums in full upfront. D. Opting for monthly premium payments. Answer D. Opting for monthly premium payments. Explanation: paying premiums monthly often leads to higher overall premiums because insurers may charge an administrative fee or interest for the convenience of monthly payments. Paying annually or in full upfront usually results in a discount. Question 22. Homeowners risk factors. Which of the following is a significant factor an underwriter would consider when evaluating homeowners insurance application? A. The applicant's car insurance history. B. The applicant's criminal record. C. The presence of swimming pool at the home. D. The applicant's income level. Answer: C. The presence of a swimming pool at the home. Explanation: the presence of a swimming pool significantly increases risk as it could lead to accident or liability claims. This is an important consideration for underwriters when evaluating a homeowner's insurance application. Question 23. Liability coverage. What is typically covered under liability insurance in a homeowner's insurance policy? A. Damage to the insured's home from fire. B. Medical expenses for injuries to the insured's family members. C. Damage caused by the insured to neighbor's property. D. Damage to the insured's vehicle in an accident. Answer: C. Damage caused by the insured to a neighbor's property. Explanation: liability coverage typically covers damage or injury that the policyholder causes to others, including damage to someone else's property or injuries they cause. It does not cover the policyholder's own property or injuries to their family members. Question 24. Claims handling process. Which of the following is typically the first step in the claims handling process? A. Investigating the cause of loss. B. Settling the claim with the policyholder. C. Issuing a payment to the insured. D. Denying the claim if it doesn't meet policy terms. Answer A. Investigating the cause of loss. Explanation: the first step in the claims handling process is to investigate the cause of the loss to determine whether the claim is valid and to assess the extent of the damage. This helps insurers decide how to proceed with the claim. Question 25. Underwriting and risk classification. What is the purpose of risk classification in underwriting? A. To categorize applicants based on their ability to pay premiums. B. To evaluate the personal habits and lifestyle choices of the applicant. C. To group applicants into categories based on their likelihood of making a claim. D. To determine the amount of coverage needed for each applicant. Answer: C. To group applicants into categories based on their likelihood of making a claim. Explanation: risk classification helps underwriters group applicants into categories based on their likelihood of making a claim. This classification allows insurers to set appropriate premiums based on the risk posed by each applicant. Question 26. Deductibles and coverage. Which of the following is most likely to result in a lower insurance premium? A. Choosing a higher deductible. B. Increasing the coverage limits. C. Adding more covered perils to the policy. D. Selecting more comprehensive coverage. Answer A. Choosing a higher deductible. Explanation: choosing a higher deductible lowers the premium because the policyholder is assuming more of the financial risk. This reduces the insurer's potential payout and, in turn, the cost of coverage. Question 27. Personal auto insurance. Which of the following factors would an underwriter most likely consider when determining the premium for an auto insurance policy? A. The applicant's marital status. B. The make and model of the applicant's vehicle. C. The applicant's age and gender. D. The applicant's occupation. Answer B. The make and model of the applicant's vehicle. Explanation: the make and model of a vehicle directly affects the risk of insuring it. Some vehicles may be more expensive to repair, more likely to be stolen, or more prone to accidents, all of which affect the premium. Question 20. Commercial insurance exclusions. Which of the following is most likely excluded from a standard commercial property insurance policy? A. Fire damage to the business premises. B. Vandalism, damage to business equipment. C. Flood, damage to business property. D. Theft of business inventory during a break-in. Answer C. Flood damage to business property. Explanation: flood damage is typically excluded from standard commercial property insurance policies unless the business owner purchases a separate flood insurance policy. Other types of damage, such as fire, vandalism, and theft, are generally covered under standard policies. Question 29. Professional liability insurance. Which of the following is most likely covered under a professional liability insurance policy? A. Damage to a client's property. B. Personal injury resulting from business activity. C. Errors and omissions in the professional services provided. D. Theft of business assets. Answer C. Errors and omissions in the professional services provided. Explanation: professional liability insurance, also known as errors and omissions (EO) insurance, covers claims made against professionals for mistakes or failures in the services they provide, such as providing incorrect advice or failing to deliver services as promised. Question 30. Factors affecting underwriting. Which of the following factors is most likely to influence an underwriter's decision to accept or decline personal auto insurance application? A. The applicant's credit card history. B. The applicant's previous experience with commercial vehicles. C. The applicant's driving record and accident history. D. The applicant's family size and household income. Answer C. The applicant's driving record and accident history. Explanation: an underwriter will focus on an applicant's driving record and accident history as primary factors in evaluating the risk associated with the applicant. History of accidents or traffic violations increases the likelihood of future claims and thus affects the premium.